Welcome, everybody. Trickle on in, and we are going to get started here in just a couple minutes, waiting for the rest of the Kadena team to join. And John and Tyler, if you guys are in here, remember to request to speak. Sometimes it doesn't send you guys to the top of the list. Got John in the house, and I think we're just waiting on Tyler. Welcome, John.
Hello. Can you hear me?
Can hear you loud and clear. Thank you for coming on.
Oh, yeah, my pleasure.
Shall we wait for Tyler, or do you think he's going to be a bit late?
He shouldn't be too late. We can give him 1 minute.
Yeah, let's hang tight. No worries.
I will actually send him a little ping. Where in the world are you located at?
So I'm on the East Coast in the U.S. How about yourself?
West Coast, U.S.
Okay, right on. Very cool. And we're excited for this one. I have a list of questions. I'm thinking you've already seen them, probably in the Google Doc.
Correct.
And so we'll go with the questions, but I oftentimes will ask follow-up questions based on your answers. And if something pops up in my head, I'll ask that. Towards the end, if you guys don't mind, I might ask you about what you think of there's Tyler, and what you think of the overall market and where you see the space going, kind of more generic questions that I find interesting to hear answers from with people that are so embedded in building in the space.
Sure. Yeah, I will let you know that I'm definitely more on the technical side of the equation. So it's good to have Tyler here to speak to eco and market a little bit more than I will be able to. But I'm very happy to dive into the technology with you.
Yeah, fantastic. No worries. I love a little tag team. Tyler, welcome to the podium.
Thank you so much. Really excited to be here and great to be up with John.
Yeah, excited to have you guys here. Jenny, thank you so much for organizing all of this. This is amazing. We finally got Kadena on, and let's get started. Good afternoon, good evening, good morning, wherever you are, Whale Coin Talk community. My name is Noah, and I'm here today with John and Tyler from the Kadena team. Gentlemen, before we get started, do you want to give our audience a quick background of your career path and how you found yourselves working in this industry?
Sure, I'll start out. So today I'm Chief Technology Officer at Kadena, but I really did not start in the blockchain space until about 5 years ago. My background is mostly in compilers and formal verification, so a little bit more academic computer science arena. But I started working at a company, not Kadena, it was another blockchain company, slightly different area of the space. And at first I was a bit skeptical. You know, I didn't own any Ethereum or Bitcoin. I had never bought into all of the hype that was surrounding it. So this was my first experience coming in, mostly as an engineer, not as an advocate. But working in the space and sort of seeing some of the potentials that the technology opens up, I did become a lot more of a believer over the years. So when I thought about my next move and where I wanted to go in my career after that company, I picked out Kadena because I knew some of the people there and I really liked what they were doing with the packed language and some of the choices they had made.
John, really quick before Tyler goes on, you said you're a tech guy, and at first you were skeptical, and then you saw something about the technology that it sold you. It led you to joining the I don't want to say cult, but the industry. So, what exactly was it that you saw from a technical perspective in the technology that made you say, okay, the light bulb's gone off, let me get in the mix?
It may be a little bit cliche, but believe it or not, it was actually sitting down and reading the original Bitcoin white paper. Up until that point, I saw a lot of hype, a lot of speculation in the market. People were talking up Bitcoin in the way they've talked up many shiny objects in the past. But when I read the Bitcoin paper, I thought, oh my gosh, this is not very long. It's very clear, nearly lucid, and the ideas hold water. This seems like it really could provide a way to give instant transfer with authenticated proof of ownership. And that kind of turned on the light bulb that there's a kernel here that's to be trusted more than the things I see in the marketplace.
I love that answer. And Tyler, you're up next.
Right on. Well, it's always great to be in the company of esteemed colleagues. John's a super impressive guy, as I know we'll get into throughout this interview. You'll hear him speak. My background academically is in applied math and economics. I'm also currently at Stanford, where I do a PhD in neuroscience. Professionally, however, I got my start in crypto really through my venture capital fund, Asimov Ventures. We were the first seed investor in Kadena, invested in a few Web3 projects. And what really impressed me at the time was we were looking at the ecosystem of layer one blockchains, and there were so many people that were building Ethereum clones or claiming to be an Ethereum killer by making some small tweak. And what Will and Stuart had done was really create this impressive innovation, both in terms of how to scale proof of work, as well as how to build smarter, safer, smart contract languages for building blockchain applications. So for me, crypto, like John, I got interested in Bitcoin. I was a Bitcoin miner back in the day, an Ethereum miner, and intellectually like this idea of decentralized money as a killer application to cross borders and get rid of sovereignty and censorship. So to me, it was an intellectual pursuit and something that I found appealing. And Kadena really hit that sweet spot of contributing some key innovations that got me excited. And most recently, in the past year, I've come on board as a tech adoption lead for Kadena Eco, which is the growth hacking arm of Kadena, if you will. So I've been fortunate to spend a lot of time with the talented builders and community members in the Kadena army, many of whom I see on the call here today.
The Kadena army. Okay, let's go. Let's get it started, guys. I heard about Kadena, I believe, last September. You guys had a pretty big run up during the bull market, and I kept hearing a lot of hype about this proof of work blockchain, but that's also scalable and has high TPS. But not to steal your thunder, give us a high level overview of what Kadena is and what solutions your layer one blockchain aims to solve.
That's a very, very good question to start out with. So what Kadena is, the spirit of Kadena and what's in its bones, is that Will and Stuart looked at Bitcoin and some of the ways it had really succeeded. It succeeds at decentralization. It succeeds at being a store of value for those who believe that crypto represents a store of value. But within the blockchain space, it's been very successful as providing a bedrock for the types of things people want to use digital currency for. But it lacks in a few areas. So we know that it lacks in extensible smart contracts. That very naturally led to Ethereum and its success. We know it lacks in scalability. We know it lacks in being able to increase its transaction throughput. And so what Will and Stuart did in conjunction with Stuart Haber, one of the co-inventors of blockchain, they tried to think of ways to preserve the merits of Bitcoin while alleviating some of the things that were holding it back. And that's what led directly to the creation of Chainweb. And Chainweb is what gives us this ability to span transactions across multiple chains where the number of chains can grow at any time in the future to support heavier and heavier load. And I'm happy to go into more depth or detail about Chainweb and how it works if you're interested. But this was essentially what Kadena was about. How do we take the success of Bitcoin and then make it more successful, the basic idea more successful, without going in a side divergence to things like proof of stake or other areas that haven't proven themselves as well?
Right. So, and you elaborated on this. My understanding is that Chainweb it brings together, it braids together a number of Bitcoin-like blockchains based on what I read, and I'm curious to know, can those number of chains infinitely expand to support a transaction volume and activity on the in the ecosystem?
Mathematically, the answer to that is yes. There will be constraints on processing power and memory available. So as the number of chains grows, the nature of the graphs and the connectedness between the chains alters. So there's two dimensions you can control. You can either control the diameter of the graph, which is how many hops away from one block can you get to a ancestor block on any other chain, preserving Bitcoin security property. Then there's also the degree of a block, which is how many other blocks does it have to be connected to maintain the integrity of the web. And these numbers there, if you go onto Wikipedia, there's a table of how to calculate how many chains you'll get based on what numbers you plug in for the degree and the diameter. And we can just play the numbers with that. But as you get into the really, really high numbers, like if you had millions of chains, then you have to ask, well, what are the limits of a single node computer and what can it calculate? Because you will need to calculate attributes of the chain, and those calculations will get more and more intense as the number of chains grows. But I don't think that we'll be running into scaling limits for quite some time, given that compute is also advancing as time goes by.
One piece I
So,
wanted to
John,
briefly
go ahead,
build
Tyler.
off build off of there is one of the beauties of Chainweb is that it acts like a rope. So you can think about the throughput as equivalent to however many chains you have, like 20 chains. That's about 20 times the throughput of, say, Ethereum in the 1.0 incarnation. But what's amazing is that the strength of that network, unlike proof of stake scaling, isn't actually sacrificed. The security has a model where each chain connects to other chains in a set pattern, such that to attack the network, it's kind of like cutting the rope. So you get the throughput of all the strands of the rope, but the strength of the entire thing. That was an analogy that really helped make it click for me, and maybe for those in the audience who are less technical, that'll be helpful for you too.
Yeah, I couldn't agree more, Tyler. Sometimes I need things explained to me in layman's terms, but bringing together John's technical breakdown and then your kind of applicable. Excuse me. It's my third space of the day breakdown. It really helps brings things together. Can you guys give us a breakdown of Kadena's or Chainweb's proof of work consensus mechanism and exactly how it is different than Bitcoin? You kind of explained how the infrastructure is different than Bitcoin, and that's going to lead me into my next question, which is, how do we participate in consensus? How do we mine KDA?
Tyler, do you want to answer this one first?
Yeah, absolutely. So the beauty is that Kadena really took what was right about Bitcoin and didn't change the parts that it nailed. And we think that Bitcoin absolutely nailed consensus. So the consensus mechanism is effectively the same on Kadena as it is with Bitcoin. It's all the same Nakamoto consensus model. Now on mining, I think this is where things get very interesting. So today, most miners will actually mine all 20 chains in parallel. There's some ASICs that are available on the market from providers like Bitmain and Goldshell. Bitmain actually recently introduced their Kadena miner a few months ago, and I think Bitmain produces something like 40 or 50% of all Bitcoin miners. So it's just amazing to have some of the heavyweights of the industry making long-term investments and bets on Kadena as a proof of work mining coin with 100-year emissions. There's also been a new generation of projects built on top of Kadena that are aiming to make mining more accessible to the masses and to the public. So one of the first breakout NFT projects in Kadena is Kadena Mining Club, which completely sold out their 10,000 NFT mint and has already done something around 200 or 300,000 KDA in secondary volume since the NFT collection sold out just in the last couple weeks. Anyway, what they do is they provide fractionalized ownership of a miner. So there's a centralized entity that actually runs all the miners kind of as a co-located service. And then there's an NFT that has this one-to-one correspondence with you own one NFT that gives you the rights to the profits from a single chip on an ASIC. And so in that way, there becomes this digital mode where you can actually be a miner and participate in the mining economy without needing to actually physically host that hardware in your apartment, in your home, wherever that may be. So I think that Kadena is really at the leading front of innovation for how to make proof of work accessible to the masses. And I think we're going to see more projects that take advantage of this combination of proof of work, Kadena's NFT standard Marmalade, and the ability to write creative smart contracts.
So this fractionalized NFT mining club, I mean, I love the idea. And you said the 10K mint sold out. How much are they trading for currently, right? How easy it is for the average person to go buy one of these NFTs and start earning dividends?
Yeah, so first of all, I would say this is not an official recommendation from Kadena or Kadena Eco. This is just me as an audience member in some
NFA.
sense. Appreciate it. Yeah, exactly, not financial advice. But they're in the audience here. KDAmining.club has information. I know they have a marketplace there, and they're starting to launch in more Kadena marketplaces. But I'm expecting that this is the kind of project. These are some of the first NFT projects on Kadena. So I think we're just at the beginning of this amazing growth. There's Enigma Economy is another group that's doing some fractionalized mining ownership. I think there's at least one or two more. So stay tuned. I think this is a super, super exciting space. And yeah, they're available to buy now. And I think that for builders out there, there's never been a better moment to start innovating because there's so much white space. There's so much to do. And if anyone is building and interested in grants or talking, feel free to DM me on Twitter or find me anywhere. Would love to chat.
Yeah, I mean, did you want to expand upon, Tyler, the grant program at all, or is it something that you guys are keeping under wraps currently?
Oh, no, absolutely. Very public about it. So we're fortunate to have a $100 million grants program available for builders on Kadena. We've given out a first cohort of grants. We're starting to switch perhaps into more of a rolling type of model. But in any case, there's been grants that have been given to companies like DNA, Database of Native Assets, which recently, actually, I think on Saturday, they have an auction at Sotheby's for a diamond where the metadata and the certification of origin and all that good stuff is stored immutably on the blockchain. So that's, I think, a really cool moment showing this bridging of the physical and digital worlds. So that was an early grantee. We've had grantees like CADEX, which is the first gas-free DEX, which is currently in production on Kadena. You can go to CADEX right now, KADDEX, and you can trade without paying any gas fees, thanks to Kadena's feature of gas stations, which effectively allows the developer to cover all the gas fees for users. So that's another great example of a grantee. And there's several more. There's a great team out of Stanford that's a grantee that's currently secret under wraps, but we'll be hearing more about them soon. There's an absolute incredible backlog of talent that we're trying to get through and prioritize folks. So if you've already applied for a grant, feel free to ping me, ask for status. But in general, what we're looking for is folks that are pre-seed, kind of seed stage, maybe haven't taken in money from investors, but you have a great idea, you have a team, and you're able to build a prototype deployed on testnet over the course of a few months. And the grant program is really intended to help people go from that initial idea and provide a little bit of support and make sure that they can get a prototype out the door and be ready for more serious investment from either investors or retail, whatever it may be.
Beautiful. And thank you for that breakdown, Tyler. I would advise, again, not NFA, do your own research, but I would advise people to go check out that grant program. It seems quite lucrative. I wanted to wrap up some thoughts on the consensus mechanism. Obviously, fractionalized NFTs that give you part ownership to mining pools is a paradigm shifter, right? It's a game changer. But let's say that, and I think I already have my answer, but I want to just clarify, but let's say that I am somebody that wants to just set up my own mining operation. Is it as difficult to mine KDA as it is Bitcoin, since, like you said, the consensus mechanisms are virtually the same?
Great question. So the answer is actually no. And the reason is because the block production rate on Kadena is so much higher, right? There's 20 times the number of chains. That means there's and also the blocks are a bit faster than Bitcoin. There's way, way, way more blocks per day, per hour than there are for Bitcoin. So that creates some really interesting dynamics where, for example, on Kadena, it's actually profitable to be a solo miner. You don't actually need to be part of a pool. Many choose to for convenience, but you can solo mine your own node if you'd like to. Additionally, as time goes on, for example, you talked about scaling, infinitely scalable, or what happens if you scale to 1,000 or 10,000 or 100,000 chains. We'd expect that rather than an ecosystem where only the big folks are able to afford the mining farm and compete for mining blocks and have that economies of scale. We actually expect that people will ultimately be able to mine just a small number of chains or even individual chains. And that will allow them to sort of consolidate their resources in specific areas. So I think that the mining model of Kadena actually reduces emission volatility for miners because there's more blocks, there's more block rewards. Kadena is, I believe, still the most profitable proof of work mining token by far. And I think that we expect that some of these fundamental advantages around tokenomics and being able to learn from Bitcoin, Bitcoin was this grand ambition at the time in 2008. A 20-year cycle felt like forever, but here we are in 2022, and suddenly, what happens at the end of some of those mining rewards is a more topical question with Bitcoin. And with Kadena, we've been able to learn from that and plan for a century-long economy where mining will support miners for decades to come.
So one more question on this topic, and I ask this because I have so many friends, not so many, but I have several good friends that, and myself included, that have been interested in participating in your consensus. Typically, how much would a single miner cost, and what would be the ROI? I always end these AMAs with NFA, DYOR, but because we've been discussing so many financial components, everyone NFA, DYOR. I'm just asking for my own curiosity.
Yeah, good question. So it's totally dependent on market conditions. So I think in the craziness that was November and December when network adoption started to blow up really, really rapidly and the hardware manufacturers hadn't caught up yet, I heard about secondary sales of miners going for as high as like 40, 50K for things that are MSRP like 5K. I think now prices are back from the stratosphere, back more in like, the thousands of dollars range, 5K, 10K, that type of thing. I would say, again, not financial advice, but it's worthwhile to consider if you are someone that would be considering buying a machine or two machines. It's really worthwhile to consider comparing the ROI from buying a miner versus buying coins directly. I think there's a little more certainty around what you get for the dollar spent because it's hard to predict how hash rate increases in the future, that type of thing. But yeah, I think I've always found mining interesting just because you are supporting the network and you're helping transactions flow, and miners really are the lifeblood of any proof of work ecosystem. But that said, I think there's a lot of ways to get involved. Mining is a fantastic way to get involved. Investing or participating with different projects is a great way to get involved. Building is a great way to get involved. I think my message to folks out there is if you want to get involved with Kadena, think about what your interests are, what your talents are. There's so many ways to get involved. Some require time, some require capital, but whatever your interests are, I think there's ways to contribute to this ecosystem and have a great deal of fun, potentially make a return, and certainly learn a lot.
Beautiful. Tyler or John, can you give us a breakdown of Kadena's token economic model? I know you mentioned 100-year missions, but let's dive deep and talk more about all the utilities the KDA token provides with respect to the ecosystem and its value intrinsically.
I think this is going to also be more of a Tyler question since tokenomics are a little bit outside of the purview I'm addressing.
Yeah, so tokenomics is a great Medium blog post I recommend people check out from Kadena that goes a deep dive into the tokenomics. But basically, the lion's share of the tokens are going to miners. I don't have the number off the top of my head, as it's been a little while since I reviewed it, but it's like more than 50%. There's 20% platform share. There's a portion, I think that was community, key stakeholders and such, maybe 7% or something. please don't quote me on these again. Go to that Medium post, you'll get the precise numbers and the most thorough walkthrough. Although I will say something that's pretty interesting and unique about Kadena's model is because Kadena has this implementation of the coins being just another smart contract. It meant that when the community gave feedback, I think it was maybe 2021, about a year and a half ago, there's a comment where people are like, hey, we think inflation's a little too high from the platform emissions. And the Kadena team was able, without needing to do a fork of the network, to say, hey, we're going to commit to take out the platform emissions at half the rate that the Genesis contract initially declared. And everyone can verify that that's happening. So the platform emissions went from a 5-year cycle to a 10-year cycle. And I think this kind of is a testament to some of the implementations of Kadena where not only are smart contracts safer, but in many cases, smart contracts are upgradable, and there's options to, for example, reduce the rate of emissions for certain things. Of course, the mining emissions are set in stone, right? Those are set. They are what they are. But I think that one of the beauties of coins as a smart contract and coins as just another piece of code, KDA in some sense isn't elevated with that much more special privilege than what someone could do by making their own coin contract. Like, yes, there's an element of gas fees, but even then, there's innovation that's possible in terms of people being able to make gas tokens if they really wanted to. So I just wanted to mention as a highlight that KDA as a token is, of course, one of the most adopted pieces of code and currencies on the Kadena network. But in some sense, the network is fairly agnostic, and I think what's beautiful about the tokenomics model is the distribution of the coins has been so decentralized to community, where if you look at the Kadena army, a big reason why we saw this big push in late last year was because there was a diverse set of miner stakeholders that got frustrated with the marketing, frankly, that Kadena was doing. And community said, hey, look, guys, your marketing kind of sucks right now. We're going to step up and show you how to do this. And they did a better job than we did. And they kicked ass. And as a result, there's a lot of people in the Canadian community that saw the fruits of that labor. And so I think that's one of the beauties of this kind of proof of work emission style distribution is we have such a distributed ownership that there's an army of folks out there that are so passionate, so knowledgeable, that collectively know way more about the ecosystem than anyone at Kadena does. And it's a team collaborative effort where your community is as much a part of the team as any one of us.
Tyler, when it comes to making protocol decisions like the one you just outlined, who makes the decision? Like who has the final call?
Yeah, great question. So it depends, right? So for example, let's say there was going to be a release, John and his team updated some of the node software and made a decision and said, hey, we think everyone should upgrade to this software. And it made this change to go into some technical minutia for a moment. We changed the gas price of a particular function, which will then impact coin transfer costs by X amount. The community, the miners, could basically say, hey, we like this update, we're going to update. Or they could be like, actually, this is terrible, screw you, we're not going to. Now, there's a lot of goodwill with the Kadena core team and the miners. And so, thus far, I think there haven't been any contentious updates per se. But I just wanted to highlight that proof of work is in some sense the original DAO. You look at Bitcoin, you look at changes to the Bitcoin protocol, we may not have had the phrase decentralized autonomous organization at the time, but every step of the way, when decisions are made to change the protocol, there's this collective vote via the hashing power of the network to say, yes, we agree with this change, or no, we don't. And if you don't agree with the change, well, guess what? The change isn't implemented. So ultimately, the community controls the decisions that are made. And the Kadena team, the Kadena core are trusted stewards and of course the inventors of the technology and the most sophisticated maintainers and some of the best PAP coders out there. But at the end of the day, this is a decentralized system, right? Kadena doesn't control it any more than a particular holder controls it. There is absolutely reason to acknowledge the contributions of people that are super smart and intelligent and have been working on this as their life's project. But at the end of the day, the control, the voting, it's with the hash rate.
Are there any tools or any websites that we can go and see how decentralized the hashing power is or centralized it is?
Good question. I think there's a few third parties. I don't have any that I endorse off the top of my head. I think there has historically been a couple pools on Kadena that are pretty powerful. And I think that that's something that we're definitely interested in increasing the diversity of. I'd say sort of two things there. So first of all, we've made great efforts to make sure that solo mining is profitable, and even more so than actually mining to a pool. And so that's something that we're hoping to encourage miners out there. If you are in the audience and you're a miner, would really encourage you to consider solo mining. There's a Docker container you can get up and running really fast. You don't need to be super technical, but I think that's a great way to contribute to the decentralization of the network. The second thing I'd mention is that unlike in proof of stake, suppose a mining pool actually did collude, or maybe the people that ran the mining pool did something nefarious and attacked the network. That'd be a bad situation. And in fact, in Bitcoin's history, there have been periods of time, I think in the first 3 or 4 years in particular, where there were individual entities that mined multiple blocks in a row that were in a position to execute 51% attacks. Now, what's great about proof of work is that you can recover. If someone does something malicious and the community is like, wait, what the heck? Someone just double spent a ton of coins or did something nefarious. You can then say, hey, look, we don't believe in this mining pool anymore. I'm going to change the server that my ASIC is mining to and go to this other mining pool that is a good actor. And so I think that it's important to recognize that, unlike in proof of stake, where once someone acquires a sufficient amount of capital, they own the network now and forever, that in proof of work, if an actor does do something malicious, which might be a questionable decision from a game theoretic decision, but it's within their agency, then one can recover by effectively appealing to the owners of the actual compute power. So I think that we're always aiming to increase decentralization. More mining pools is a good thing. We have green mining initiatives. We have solo mining initiatives. That said, in proof of work, having mining pools that have a large share of the hash rate isn't the same death knell as it is in a validator-based system.
I couldn't agree with you more. We had a debate, proof of work versus proof of stake, a while back on the Aquarium, and I can make arguments for both. But in the end, I'm also a big POW believer. I think it's the most decentralized way to reach consensus in the long term. But anyway, not to go on a tangent, you said you guys have great solo mining docs. Where can we access those?
Give me 2 minutes to pull that up, and I'll chime in sort of as a non sequitur once I have the link in front of me.
Certainly. So we can, while you do that, we can move on. You've mentioned the Kadena Army multiple times. Can you give us some more insight into this army, kind of the value that they provide to the ecosystem and what their function is?
Yeah, so it's kind of like the Reddit hive mind, like there's no one person that is the Kadena army, but there are many people that are part of the Kadena army. As far as I understand it, it emerged very organically. I think on various Telegram groups, people that were memers kind of got together and started branding themselves self-styled Kadena army and being the arms bearers, the shields bearers, sharing the good word, if you will, being evangelists. But increasingly, the group has become more and more sophisticated and knowledgeable. So if you look at the YouTube AMAs or Twitter space that we hold, we'll get some really good questions that, no holds barred, where people will ask like, defend and explain this technical decision that was made and why it's good. And then you'll be on the spot and be like, it's a great question. Here's the thinking. And oftentimes there's a discussion back and forth. And there's been instances where the community, makes a strong case and we're like, well, crap, we really need to step up our level of commitment towards, documentation or resources for learning Marmalade and so I think that it's a constant conversation where the Kadena army is both our biggest evangelists and our biggest critics, where they're the people that are ready to fight and defend and explain Kadena patiently to the masses. They're also the people that hold us to the highest standard of rigor and I think push the team to perform as well as it can. So it's a blessing to have this community, and it's one of the things that I'm so excited about working in this role is all the interactions with community members. And you'll see that a lot of the content that we produce, it started off with me being moderator, asking lots of questions, and now we're about 80% community asking questions and trying to just get through everything. So the Kadena army is really the evangelists, the critics, the supporters, the core beating heart of Kadena.
Beautifully put, Tyler. Again, I wanted to move on and talk about Pact. Kadena uses a smart contract language known as Pact, and I'm curious to know what makes it so unique and powerful for writing applications directly on the blockchain.
Sure, I think this is one I can definitely take. So when you look at what a contract needs to do on a blockchain system, the blockchain presents you with this indelible public ledger that keeps this sort of public record of what transfers have happened, what coin balances are, et cetera, et cetera. And if we can simplify that, then it really is, in a way, a database application. It's a database application with a publicly visible journal that no one can modify. And then you can prove ownership based on that, on those qualities. So what do you want from a database contract language then? You want something that gives you all the features you need to update that database, but none of the features you don't need. And so what Pact does that a lot of languages, other languages running on blockchains have not chosen to do, is Pact actually restricts its programming model down to what's needed for financial and governance types of contracts, so that those contracts can be more securely written and written with a greater assurance that you're going to be protecting people's value without giving you a whole bunch of foot guns to shoot yourself with simply because they could have done so or because those features are popular or interesting. So we take away things like general recursion, we take away general iteration, we narrow the scope down to the best set of functionality for the types of problems Pact is trying to solve. That just allows programmers to then proceed with greater confidence.
And when you compare Pact to Solidity, how difficult is it to learn?
Pact as a language is not very difficult at all. You have simple concepts like variable binding, function definition. Then you have a little bit higher level concepts like guards and key sets to control who can do what, and then enforcing those things. So you can, for example, in the coin contract, there's a transfer function. And the coin contract, boiled down to its essence, it's maintaining a balances account table. So this is a mapping from accounts to balances. That's really the essence of what the whole coin contract is. But how do you ensure that Alice trying to transfer to Bob is doing so legitimately? That is actually Alice making the request. That's where the key confirmations come in. So when Alice sends the transfer message signed by her private key, then Pact can enforce with knowing her public key that Alice is the one making that request. So this type of structure is baked into the language so that you don't get it wrong. And we also do things like never allowing you to represent keys directly in code. They're always sent as metadata that goes in with the message. Whereas Solidity and other systems like that, far more general. They're letting you do lots of things that general purpose languages would let you do. Some projects even refer to themselves as sort of a global computer or a giant virtual machine that could do any type of computation. Pact is not going after that space. Pact is going after safe, secure, and correct management of funds and properties on blockchain.
And are these components, John, that you just highlighted, the reason why you guys say Pact is designed to be readable by non-developers? Could you expand upon that a bit, please?
That might be a little bit of a stretch. I think that since we do narrow the scope down to a very limited set of features, it is not difficult for a person who is used to reading business logic written in pseudocode to get a good idea of what a Pact contract is doing. I don't think you need to be a developer to learn to read Pact. I'm not sure that every Pact contract is going to make immediate sense if you've never seen it before or you don't have experience reading code at all. But it is for certain a lot closer to being straight out of the box human readable than any general purpose type of language usually is.
If I could add a little color commentary, I think we've come to realize that people come to Kadena for Chainweb and they stay with Kadena because of Pact. And just to give an anecdote on the human readable side, I was a participant in the Kadena bonding program that took place in 21. And as part of that, there was this totally bizarre, who the hell knows how to figure it out tax situation that emerged of how do we pay taxes on some of these coins that we're getting based on this bonding income? And so, I was talking to my accountants, And they're like, hey, do you have a legal agreement we can review for the bonding program? And it's like, no, we don't. It's a smart contract. Like literally the only agreement I have is in code. And they're like, okay, well, where's the code? And I actually sent them the source code for the Kadena bonding program. And these are accountants, mind you, right? They're not programmers. And it was sufficiently readable enough that they were able to look at the source code for the bonding program and determine the tax treatment. So, I don't know that they understood every line or could, write it themselves for sure, but it was at least understandable enough that I could send the source code to my accountants and they were able to figure out the tax treatment, which I think is something that'd be hard to imagine in Solidity.
Again, thank you for that practical breakdown. I think that you guys make a great tag team, Tyler and John.
Yeah, I would say it is sufficiently readable for transparency, and that is easy to stand behind.
Love it. Guys, moving on, I went on DeFi Llama and I saw that Kadena is currently live, obviously, with 5.6 million in TVL. And I know that we mentioned KDEX in the beginning, the gasless decentralized exchange, but I'm curious to know what some dApps that are currently being built or are already live on Kadena that you guys are excited about.
Tyler, this seems more in an eco area.
Yeah, absolutely. So on the ecosystem side, so obviously DEXs are key. Lago Finance, a grantee, has brought the first stablecoin over to Kadena, which is going to continue. I think they did more than $100,000 through with Kadena Mining Club and in USD through that bridge, and continuing to grow. I think on the DEX side of things, I will say anecdotally, we've been starting to monitor the blockchain more closely as we're starting to get a lot of organic builders start to emerge that we have no idea who they are, but they're pushing amazing code. The other week, Jake, when a talented engineer at Kadena, shot me a message being like, holy crap, who wrote this lending code? And we looked at it and it was like, this beautiful code. Like, I have no idea. But I think that lending is an area where we're aware of a couple teams that are building that space, and I think there's some huge excitement for what the possibilities are. And I think we're going to continue seeing people on the NFT side, on the DEX side, on the lending side. I'm personally very bullish in terms of some of these synthetic financial engineering businesses that are emerging to basically build off of the key pieces in crypto already and try and make them more accessible. So we already talked a little bit about mining and making that more accessible. I think there's so much interesting innovation to happen, but I completely agree on TVL. It's a metric that is easy to look at and use as a gauge of activity. It's one that we're definitely going to be looking at how we can help encourage yield generating opportunities for KDA holders rather, and also help figure out ways that we can ethically steward the platform share and use it to drive growth in the ecosystem and drive adoption for projects that are building on Kadena. So stay tuned. We definitely have some big moves coming in terms of getting folks lots of opportunities to gain as much utility from the ecosystem as possible.
Tyler, that leads me, that leads me to my next question. A lot of new ecosystems launch liquidity incentive programs or have popular DeFi applications such as Aave and Curve expand to their ecosystem just to attract that liquidity over. As you guys probably know very well, it's hard to get people to bridge their funds. And I know that with EVM compatible chains, it's typically easier, but I'm curious to know, is that a possibility for you guys to attract popular DeFi apps such as Aave, such as Curve over to your ecosystem? And if so, what are some ways that we can, I know this is a two-part question, but what are some ways that we can safely bridge our assets over to Kadena from popular EVM compatible chains?
That's a great question.
One of the technologies actually that's in the pipeline right now that we're just getting into the testing phase for is allowing CK rollups to be executed in correspondence with an on-chain packed contract. So you will be able to manage assets and balance transfers in some off-chain facility and then use a proof construction system to bring evidence back to chain that those balance updates are valid and legitimate.
I just wanted to highlight that Kadena has actually been an innovator in bridging from day one. So we have multi-chain in production, right? So from very early on in the network's history, Kadena had solved the model of safely transferring assets from one blockchain to another. It works very simply. This one I'll actually explain in technical detail, and everyone's going to follow it. You burn coins on, say, chain 0, and then you go to chain 2, and you submit a proof that you burned those coins. Like, hey, look, I just burned these coins in chain 0. Let me create new ones on chain 2. And that's it, dead simple. So that's been operating in production live with no hacks, no attacks for a couple of years. Now it is harder when you go from one chain to another. A key reason for that is Pact gives us a lot of safety. And so the reason why we're a little skittish about running bridges ourselves is, gosh, you see how many hacks there are from Ethereum to different blockchains, and you get a little nervous. And a lot of the times it's just due to some Solidity code or some interaction with the centralized server and such. So I think that it's going to be exciting to see how that works on the ecosystem side. But what I will say is this is an area where everyone in the audience here could be of huge help. If you believe in Kadena, you're excited about what's possible here. I would love if you are a member of AV or Compound or one of these other DeFi protocols, start asking them about Kadena. Ask them to look into it, ask them to consider adopting. We're super happy to help folks accelerate adoption of bridging over applications. It is harder. It's not EVM compatible. You can't just copy and paste code and be done. But honestly, I think the era of just copy and pasting code and launching a new service on a chain and running the identical thing is kind of coming to an end. And I think what we care most about is building new applications and dApps that provide utility. And if you are someone that's innovating and creating something new, Kadena is a great place to be innovating because you have the safety of Pact, you have the security of proof of work, you have the scalability of Chainweb. There's not a better ecosystem out there to build on, and Pact builders are happy builders.
So what are some, and it makes sense when you put it like that, Tyler, what are some strategies that you guys are using, marketing strategies, incentivization strategies to attract builders over, to attract users, liquidity, whatever the Kadena team believes to be important over to your ecosystem?
Absolutely. So grants program is one for sure. Just being more active in community, we're producing content and interacting with community on a weekly, on a daily basis. I think a big part though is through really high level hires like John, who's just an absolutely phenomenal developer. For those that aren't familiar, John's very humble as introduction, but he was the core maintainer of Emacs for many years, which is like the programmer's Swiss Army knife, and just has such a storied background in functional programming. And I think that a key part of this next phase of growth is saying, hey, how do we help attract the best builders, the best developers to Kadena? And I think a large part of that is making sure that we have key thought leaders in-house that then are building out tools that can help you become a better programmer. We haven't talked about formal verification yet on this call. I'll mention it as a buzzword that you can go Google later if you haven't heard of it. But I can see, so the formal verification is a tool that was invented in academia well over 10 years ago. People have been playing around with it in an academic time for a long time. But there aren't many or any mainstream programming languages that let you say, hey, I can formally prove that this code is bug-free or it doesn't have this kind of mistake in it. And this is something that Pact, for the first time at a program language level, to my knowledge, brings into the hands of users. Previously, you have to be a big, schmucky schmuck at JP Morgan or Goldman Sachs or Bank of America. And then you're like, hey, I have this critical application. Let me go pay this firm $100,000, $500,000, build out formal verification, ensure my code's bug-free. And with Pact, for a lot of application domains, you get that feature baked in at the language level. Now, I'm not expecting that anyone that just heard me say that understands everything with what that means, but I hope that I planted a seed of curiosity that if you're like, wow, that sounds useful, that you kind of look into formal verification, maybe you read a little bit, and then you say to yourself, well, actually, maybe this is going to be a feature that a lot of programming languages are going to have in 5 years. And if I want to invest in my own education, what better way than to start learning Pact and have a cool blockchain that I can now program on top of, but also have this new toolkit in my arsenal that I can take as I become a better and better programmer.
And if I could address any potential contract writers out there, the level of simplicity that this formal verification system offers is rather unprecedented, as Tyler said. So as a very, very simple example, if you're writing a coin contract, you don't want to transfer negative amounts. And that just seems pretty obvious. But the data type, which represents the amount, which is just a decimal, so like a floating point number, that allows negative amounts. So how do you ensure that your contract's never going to attempt to transfer negative amounts? All you have to do in Pact is annotate the code to say a property of my transfer function is that negative amounts are not okay. In fact, zero amounts are not okay. And then the formal verification system will, in the background, automatically validate and point out to you if any of the code paths in your contract lead to transfer being called with a negative possible amount.
I just want to highlight how huge that feature is. It may not be intuitive, but imagine that you have built a DAO that has a treasury and someone finds a way to call, for example, like a deposit function with a negative amount. Holy crap, you might have just found a way to drain the treasury. So that's like a very simple example of how formal verification, that explanation I think was crystal clear. You can't transfer a negative amount because it doesn't make sense. But if your code accidentally allows that and you have a mistake through some convoluted, hack type of attack, that's an example of an exploit that's possible in every other blockchain ecosystem, to my knowledge, that literally cannot happen in Pact on Kadena.
Gentlemen, are you currently trying to attract a certain niche of builders in the industry, or are you just kind of painting a broad brush and welcoming anyone that wants to build, or rather marketing towards anyone that wants to build on Kadena?
Yeah, I'm not
Honestly,
sure that
go ahead,
we
John.
have identified a specific audience who's the only group of people we're interested in. But yeah, go ahead, Tyler.
Yeah, I was
They
about to
can,
say the same thing. That I don't know that we have one segment parceled out. We've had some internal discussion. We've seen, for example, that people that have experience with database programming or backend programming seem to pick things up really, really quickly. People tend to like Pact and Kadena if they have some functional programming experience. It's more of like an aesthetic preference, if you will, like someone likes modern art or someone likes classical art. But I think ultimately we're quite focused on Web 2 developers. So people that, if you look at blockchain, right, there's 20,000, 25,000 odd Web 3 developers. There's 20 million programmers out there. So the current ecosystem is small. So we're very much of the mindset that blockchain is fairly collaborative. It's a multi-chain world. Our competitors aren't really other blockchains. It's the traditional financial systems. It's traditional web apps. So for us, I think it's about how do we increase the size of the pie for everyone, and part of that means how do we get talented programmers that are smart and know how to code onto Kadena, and also if people are just passionate. I'm a big believer that one of the key innovations of crypto is a socioeconomic innovation, which is access to liquidity and access to capital. It may sound a little Marxist, but I think that reimagining, you look at all these jobs that are available now and companies, there's such a tight labor market and they're still offering all these really crappy jobs that nobody wants to work. And then in crypto, you have this wild, wild west where it's like, hey, come build what you're passionate about. Do something that's cool. Do something that makes you stoked, get out of bed in the morning and start building and start working and start hacking. And there's resources available and there's cool things to learn and you'll make a meaningful contribution. And that's where I think crypto is exciting, and think that's where Kadena wants to enable people is if you have passion, if you have drive and you have grit, you don't need to know programming right now. You could sit down today after this call, go to kadena.io/build and start learning, start building, start practicing. If you have no programming experience, it might take you 3 months or 6 months. If you have programming experience, it might take you 6 days or 3 days. It's not about the time it takes to get there. It's about the journey itself and where you end up. And I'd encourage anyone that feels that fire to come build with us.
it's such a great way to interface with the industry, Tyler, and you articulated it so eloquently. I don't know if I want to ask this. Well, I was unsure about whether I wanted to ask this next question. I'm going to ask it anyway. I'm just curious to hear from your own words. Ultimately, is Kadena here to compete with the likes of Ethereum and other layer ones, or do you believe that in the end, certain ecosystems will serve certain niches and like different, certain niches of the industry? And sorry if I didn't make sense there. I told you this is my third Spaces, and I'm a little bit tongue tied
No,
right
I think
now.
it was a perfectly articulated question. I was just waiting to see if John wanted to chime in, or I have a few
Yeah,
thoughts,
I'm
but
I'm thinking about that. You go ahead, Tyler, and I'll chime in if I have something to add.
sure. So yeah, I think this is almost a personal question, so don't take this as the Kadena line. But I personally see the future as a multi-chain world. I don't think that we're going to coalesce down to just one or two or three blockchains. I do, however, think that there are certain technologies that are better suited for some applications, and there are certain foundations that are just strictly superior. So I think we have S curves with technology. So Bitcoin was an S curve, and Bitcoin is technologically not the most impressive blockchain out there, but it was first. And it did so much right that there's this social and economic element behind it where it's too big to fail in some sense. That's my belief again, not financial advice, not an endorsement per se. Um, However, Ethereum came up with some amazing innovations around smart contracts and saying, hey, we need to make programmable money easier than Bitcoin script, which is a bunch of BS, really hard to use. Uh, and unfortunately, they kind of took the JavaScript approach where they sort of wrote the programming language in a couple of days and came up with a pretty crappy programming language by any theorist standards. Um, and we kind of stuck with it. And then other folks came along and said, hey, Rust is better, or hey, this is better. I think Kadena came along and said, no, actually, hey, Will and Stewart have been building programming languages at JP Morgan for years that are used to settle massive volumes of transactions at bulge bracket scale. And how can we build a system that can settle the entire commercial paper market? How can we build a system that could scale to settle the NYSE in terms of total number of transaction throughput, or NASDAQ? Or how can we build a system that could actually settle the world's transactions and scale in a way that doesn't sacrifice security? And so I believe that Kadena has solved the blockchain trilemma in the most compelling fashion in terms of scalability, in terms of decentralization, in terms of security. That said, there's there's huge inertia on EVM, and there's an amazing wealth of ecosystems and applications and companies and businesses and business processes that are now operating on the blockchain. Those aren't going to disappear overnight, and it's important that we are able to interface with them and extend them. And so I think that it's a yes and situation, that you can have the best technology, but if there's huge social processes on existing ecosystems, it's important to acknowledge that and to say, no, we're not trying to replace Uniswap. Uniswap is an incredible innovation. They've done amazing work. We're not trying to replace Ethereum, but rather we're trying to complement these ecosystems, learn from their mistakes, build better versions, and find ways that we can contribute in a meaningful way. And so I think that's at least how I approach it, is to respect the work of people that come before, to acknowledge those amazing contributions, to recognize that we all stand on the shoulders of giants, and that any improvements that we make are only possible because of the advances and mistakes that our predecessors made.
Yeah, and if I can add to that, so taking the CTO hat off for a moment, because again, this is more of a personal question, so I want to give you my personal answer. I think that in the further future, I look at blockchain as providing a social service. So that's looking at it beyond the tool of speculation and of ways it's been used so far. I think it really allows us to federate ideas like identity, authentication, transfer of value around concepts like math, rather than the traditional social concepts of police forces and legal agreements and those sorts of things. Looked at in that way, what I want Kadena to beat is not other particular technologies, but ideas that don't serve that social service model quite as well. So an example of that is I'm interested in seeing proof of work and its decentralization benefits beating out proof of stake and the way that it favors oligarchies or groups of people with a lot of initial funds in the system having outsized control of that system. A proof of work environment gives you a lot more democratization around mining power, access to electricity, and those types of concepts. So in that sense, I see proof of work as superior to proof of stake. That depends on what the project is going to choose as their ultimate blockchain strategy, but it's not about Kadena beating Ethereum. It's what will really give the public the benefit blockchain promises in the further future.
I couldn't agree more, John. Tyler, you guys have an incubator, accelerator, and venture fund in the pipeline. When can we expect those to go live?
Great question. So incubator is something that we're currently evaluating and helping along with on case by case basis. So if you are kind of an entrepreneur in residence type, or know you want to build in this space but need some assistance for tackling some thorny technical problems, maybe you're interested in building stuff that involves ZK snarks, as John started talking about earlier, some stuff that is sort of at the bleeding edge of what's ready and possible. That could be a great fit for incubation. Feel free to get in touch with us. We're pretty easy to reach. I'm Tyler at Kadena.io. Of course, you can reach out on Twitter DMs. I've opened them up, so you can send me a message. I think in terms of some of these next milestones, we're very focused on meeting our ecosystem with what their immediate needs are. So at the moment, as a young ecosystem, we have a lot of companies that are pre-seed stage. If you go look at Kadena Project Network, there's more than 180 projects that website's tracking. We're tracking more than 200 projects that are building Kadena. So there's been a huge explosion. That's up from like maybe a dozen, no, I should say a year ago, maybe about a dozen, and now, over 180. So it's kind of eye-watering to keep track of. But I think we've started to see, we've had a first round of companies that have now raised seed rounds that are pretty substantial and meaningful. There's been a number of companies that have raised from retail and IDOs to the tune of millions of dollars. So I think there's this amazing jump in maturity. So as companies are getting to that seed stage and that Series A stage, that's when it makes sense for more VC size checks to start coming in. We've been building those relationships with co-investors. We're excited, everyone's excited. And we actually have a sufficiently large ecosystem now where people can have a traditional VC pipeline of investing in 2 or 3% of pitches and actually have a portfolio in Kadena. So I think as a venture capitalist, that's something that's very exciting to say, wow, for me, there has to not just be great technology and platform for me to work with a company, but has to be the possibility for there to be an economy. And I think that's what I see with Kadena, is that we're at that inflection point of becoming an economy.
Gentlemen, you guys have clearly established yourselves in the industry. I'm curious to know if you care to highlight any lucrative ecosystem growth partnerships that you have.
Tyler?
Yeah, so ecosystem partnerships. So first of all, I will say that my domain has been more on the builders with the seed stage folks and less on the BD side. So you can definitely check out the partnerships page on Kadena's website, and Kadena Project Network will highlight a ton of the builders and some of the more prominent companies that are involved. I'll say that on the BD side, we kind of spend roughly 5-10% of time with big Fortune 500, Fortune 100 style companies, helping them think through what pilots look like and giving them some support. But a lot of our time is focused on the next generation of disruptive builders and innovators. So if you are out there and you're working at a big company and you're like, wow, actually what Kadena offers in terms of minting a marketplace and protecting royalties for NFT resales and ensuring that you can't just sell it on a pirate NFT marketplace and skip the cut. That's an important business case for me. Kadena's only option. Yeah, come talk to us. We're happy to support you and we'll make it happen. At the same time, I think that we recognize that the cycles for big companies adopting stuff, particularly when it involves decentralization and losing control, is a little slower. And so I think that if you imagine, for example, let's say someone's building the next great decentralized Facebook that puts the ownership of the platform in the hands of the people, or the decentralized Twitter when people want to run away from Musk or whatever. Who knows? The point being, it's hard to imagine Zuckerberg being like, actually, I'm going to give up control of Facebook and give the power of decision making to the people. Like, not going to happen. So I think on some level, when you think about the trends that John was referencing earlier, and sort of this reduction in the power of centralized power of individuals, whether it's police or whether it's CEOs, that in some level disruptive innovation comes from the bottom up. And so we're focused on the organics, grassroots. At the same time, there's existing partnerships and efforts to make sure that we can support big businesses, because there is big validation, and that's why it's so cool that there's an auction happening at Sotheby's on Saturday that is going to include an NFT on Kadena along with some marquee jewelry. So I think there's an element to both ends. I think I view partnerships as partly about the marketing and getting the word out and the adoption. I personally think that a lot of the disruption is coming from the small guys, but again, caveat emptor, I'm a VC. Of course, like the small guys are going to be disruptive rather than the big guys. And a BD person on the team would be happy to talk your ear off more on the partnership side.
John, Tyler, your resumes speak for themselves. You guys have obviously had quite lucrative career paths, and you're bringing all that knowledge and wisdom into the Kadena ecosystem, helping build it out. I would love to hear you shed some insight into the rest of your team and maybe just highlight a few and the experience they bring to the Kadena ecosystem. Also, follow that up with telling us about your relationship with Dr. Stuart Harbour.
Sure. So we do have some really great engineers working in our team. We're on the order of, I'd say, 12 engineers working on the core team right now. That does not include people working on the front end, developer experience, apps, those sort of things. I would especially call out, for example, Doug Beardsley, our director of engineering, who also does a lot of coding on some of our apps. And Lars Kutz, he's one of the masterminds behind implementing Chainweb and getting a lot of the fundamental technology in place. And I work closely with Emily Pillmore. She's one of our pack engineers. And all of these people just have amazing contributions to offer and really help me see personally that I'm working with a team that has the capability to do the kinds of things we're envisioning in the far future.
Yeah, on the Kadena Eco side, a few people definitely want to give huge shout outs to. So Dan Wiggins, I think is officially head of gaming, but he's really absolutely instrumental in running the grants program. If you're a builder, you've probably talked with him. Just an absolute monster in terms of his productivity, his ability to manage relationships and to get deals done and get grants over the line. We got Joel Woodman, who's ecosystem business development, so talented, absolutely tenacious. He's someone that's doing a lot of the work on the partnership side, also doing a huge amount of lifting on the grant side, bringing all sorts of amazing things over the line that, big announcements that have been made in the last 6 months and big announcements that are coming in the near future. There's a good chance Joel's been involved in them. And of course, Francesco, our CEO of Kadena Eco, who's been a visionary in terms of recognizing how to best keep Kadena core laser focus on engineering and taking the initiative to say, hey, look, we need to, even though I'm a programmer, we need to put some serious effort into BD, into marketing, into grants, into VC, into accelerators, into incubators, and just absolutely by sheer force of will, just making these things happen. So someone that is very inspiring in terms of his trajectory, starting at Kadena, I think, way back early days as an intern, and then just showing how talented and capable he is day after day, week after week, and until he's the CEO of a sister company now that's driving a lot of Kadena's growth. So absolutely amazing team. We have amazing advisors too that you should definitely check out at kadena.io/eco. You can read all about them.
And I pasted a link into the topic replies for the space. There was a very recent article that talked with Stuart Haber about his experiences and relationship to Kadena.
Yeah, thank you for that. Tyler, John, thank you for that. Tyler, you sparked a question in my head that I almost forgot to ask. Is there a big Web3 gaming community in the Kadena ecosystem? And if so, what are they excited about? What are they working on? Are there any Web3 games currently being built on Kadena?
Oh yeah. Actually, it's amazing. I just got a Slack message the other day where someone was like, "Hey, have you heard about this first-person shooter being built on Kadena?" I was like, "What are you talking about?" So again, we've reached this organic stage of growth. I can't say I know a ton about this project. Let's see here. Where is it? Um, oh God, I now of course I'm live. I can't find the name of it. But anyway, I don't know if they want the attention quite yet before release. But I would just say that. There's some games that we're aware of. There's folks that we've courted to build, and then there's folks that are just organically building. And I think it's exciting. And I think there's some play to earn games that are in development, and there's been early folks like Kitty Cads and other folks, miners of Kadena that have been thinking about some play to earn mechanics. So I think seeing how the gaming side emerges is going to be really interesting to me. I think figuring out how to build games that are sustainable economies and not just based on speculation or less generously, you know, I forget the phrase now for pyramidomics or whatever people are trying to rebrand pyramid schemes as. Trying to look at where can we add value to actual gaming ecosystems. I think honestly that in the NFT space and the advantages of Marmalade, our smart contract standard for NFTs, that's going to enable a whole lot more on the gaming side. And we're so lucky to have Dan Wiggins on board, who was who was at Zynga and knows the gaming space super well. Has been involved in a ton of startups and gaming that have built any games from small games indie to AAA and really knows the space well. So we definitely have the right expertise in house to help anyone on the gaming side get up and running, and excited to see what people build.
Yeah, don't get us started on Ponzi-nomics here at Whalecoin Talk. We've had this debate several times, the Web3 gaming debate. We could go down that rabbit hole for hours if you wanted to. You guys are welcome to come on episodes of the Aquarium where that, regardless of what the topic is, Web3 gaming repeatedly comes up, whether it's on Whalecoin Talk or whether it's on Mario Nafal's roundtable. So, Tyler, again, one more question that I wanted to ask, and then I want to get to one audience member who's had her hand up, and then we will get final thoughts and wrap things up. The NFT standard, Kadena's NFT standard, Marmalade, how does it differ from the popular ERC 721-1155 standard that most of us are familiar with?
Yeah, great question. So first of all, I would say that they aren't mutually exclusive. So Marmalade can support that standard, and people have built a lot of the ERC functionality on top of Marmalade and shown that you can do apples to apples things. But what I will say is that Marmalade from the get-go had a chance to learn from the early NFT lessons. So of course with NFTs on Ethereum, you had people like Dylan Finzer at OpenSea that saw this huge gap in terms of, wow, there needs to be marketplaces, there needs to be sort of an eBay for NFTs to help facilitate this nascent growth. I think with Marmalade, there's been recognition that there's a trend towards decentralizing as much as possible. And so with Marmalade, you can actually effectively run auctions on chain. You could basically do anything you want to in terms of an NFT marketplace and go direct on the blockchain, no interface required. Now, of course, when we talk about minting a marketplace, what we mean is that with a collection, you could specify rules. So an application I would love to see someone build that you could implement today in Marmalade is, for example, you could make NFTs that aren't transferable or only transferable one time. Or you could make that might be a great application for ticketing where you want to eliminate scalpers. You can implement rules like royalties that are enforced on chain and not just as metadata that exchanges are able to honor or not honor depending on the auction location. You can also imagine that each NFT is basically like it can have its own smart contract attached to it, and that's sort of baked in the standard. So there's, I think, huge flexibility. I think one of the challenges is that because Marmalade is in some ways this dramatic rethinking of the foundation of NFTs to make them much more practical, a broader base, that we do have a paucity of learning resources right now in terms of simple examples of how, like, here's how you should make a collection, or here's how you do a multi-chain NFT mint. And these are holes that we're looking to fix in the near future. So I think it's exciting to have a new standard, exciting by all the new capabilities. There's also some growth pains in terms of trying to get resources in front of people to help them be as productive as possible. But on the flip side, I think for early adopters, there's so much that people have already done. We had some interns over the summer that freaking implemented an NFT lending protocol over a course of 6 weeks. Had never done PAC before. In 6 weeks, they built an NFT lending protocol and started talking with auto companies of all places as like a way of representing, rental cars and that type of thing. So I think there's a huge range of utility. And I think what excites me about Marmalade is, of course, you can, mint a JPEG and represent it on any blockchain and have functionality that's roughly equivalent. But if you want to build stuff that has real utility, that interacts with the blockchain in more sophisticated ways, that allows for the generality of smart contracts, but with the fungibility of NFTs, Marmalade and Kadena is your best bet.
I think what excites me most about your ecosystem is the resources and the accessibility you guys give to not just folks that want to build on Kadena, but folks that just want to get more involved in this industry. I think it's awesome. I think that an FA, but everyone should go and try to take advantage of some of these opportunities that Tyler or John and their ecosystem is offering. Let's jump to Aisha. She's had her hand up for a while, and then I want to get closing statements and wrap things up.
Yeah, thank you, Noah. So, I've read in an article that Remedy, a healthcare consortium, has been using Kuro to streamline the process of gathering and maintaining insurance data. It got me thinking, what other enterprises are using Kuro or are in talks with you to employ Kuro? And I also want to know for which industries and enterprises are Kuro designed to provide solutions to in particular.
Yeah, so Kuro is really interesting. Kuro is the layer two solution for Kadena, and it provides addition transaction throughput and some degree of rollups. I think that as time has gone on, we've kind of realized internally that the core advantage of Chainweb is really at the layer one, that we can do things that no other layer one can do in terms of being able to scale from 10 chains to 20 chains, which we've already done in production, from 20 chains to 100, 100 to 1,000, 1,000 to 100,000 chains. And so I think in recent times, we've been more focused on saying, hey, look, if you're an application developer, try to push the layer one until you need more throughput, and then let's see if we can handle your needs by increasing the number of chains. And I think we've realized that the scalability model actually gets rid of the need for layer two in 95, if not 99% of the cases. And so Kuro exists, it's there. If people have a really compelling use case for it and start building on it, it's something we can, John would be better equipped to talk about engineering resources in that domain. But at least on the eco side, we've been really focused on saying, hey, look, try building on the layer one first, and it might surprise you how far you get. And you also may find out that you don't even need a layer two. And so I think that's been our messaging lately. But yeah, curious if John has other thoughts.
Yeah, no, I would go with what Tyler said. Kuro it's really awaiting any active customer to step up and say, yes, this is what we need, this is what we want to build on, and then we could respond to that need with the resources that we have. But in the absence of that, people seem to be satisfied with and are actively using the layer one solution that we offer. So all of our engineering resources at present are devoted there.
Understood. Okay, another question. I was thinking, have you obtained patents for your exclusive features and software technologies like gas station, chain web that you are using for Kadena?
There is a patent for Chainweb. It's funny that you bring that up because I was actually just trying to read it last night. But I have not yet seen a patent for gas payers. But if you search for Chainweb parallelizing blockchain patent, you will find the patent for Chainweb. It was registered in 2018.
Got it. Thank you. Thank you for answering.
Thank you for the questions, Aisha. John, Tyler, thank you guys so much for coming on today. It's been an incredibly educational experience. We've learned so much, and you guys have a lot to teach. So, again, audience members, I would recommend, I don't want to advise, but I'd recommend that you go check out Kadena NFA, but go check out Kadena, go look at all the resources and all the docs they're offering, different ways to learn and get involved. But before I let you guys go, and wrap things up, is there anything about the ecosystem that I haven't asked that you guys would like to share with our audience?
Perfect Tyler question to close on.
Yeah, absolutely. So, well, first of all, I think it's been an absolutely fantastic interview. I really appreciate your care and consideration with the questions. You've been absolutely fire as a moderator, so thank you. Would love to come back here sometime. This has been such a joy to chat. I think you've covered the bases, but I would be remiss if I didn't give a plug for any builders out there. If you have a passion in crypto and NFTs, if you have an idea, if you're a programmer, if you're just crypto curious, if you're Kadena curious, come build with us. Check us out at Kadena.io. You can hit the build tab. There's some awesome tutorials. In 10 minutes, you will be deploying smart contracts, and you will have your taste of how easy it is to get started. And what I would say is if I were looking at crypto and saying that this is where I want to build, I wouldn't let the bear market scare you. This is the best time for builders. You look historically, a lot of the biggest companies are started in financial recessions. They've been started in crypto winters. You start building now, and by the time your product is ready, you might just be catching that next upswing. And so I would say that there's never been a better time to build. The ecosystem, the market is flush with cash. There's resources available. There's hungry talent available. And it's an exciting moment in history where if you come build on Kadena, there's a good chance you can be the first to build a lot of these marquee categories that exist in other chains that don't exist in our ecosystem yet. Those are obvious opportunities. And then there's also obvious opportunities that can build off of Chainweb, build off of Pact, build off of the infrastructure that isn't available elsewhere. And you can be first in category to define some next generation of Web3 products and projects. So I would just really emphasize, I couldn't say it enough, that we'd love to have you build with us. And please check out the build page, check out the tutorials, and get in touch. We'd love to hear from you.
Gentlemen, I have one last audience member that wants to see if he can squeeze a question. Is that okay with you two?
Sure.
Mr. Rahmat, mic's yours, man.
Yeah, thank you, Noah. I'll be quick. Okay, so you compared Pact with Solidity. So what I was wondering is why did you decide to base Pact programming language on Haskell as compared to Rust?
So Haskell ends up being a particularly good language if what you care about is the correctness of the answers that your program is going to produce. A language like Rust does excel at production issues, managing how much memory you're using, how much CPU, knowing exactly how your program is going to execute on the machine you run it on. But a language like Haskell, and also other functional programming languages in that space, but especially Haskell, if the answer to the question is more important than how you get to the answer, Haskell ends up being a superior choice nearly all of the time.
Understood.
Also,
Yeah,
just
yeah.
a quick add-on there. I think people sometimes think about like, okay, Kadena was written in Haskell, and okay, Solana was written in Rust, and so it's Haskell versus Rust or something like that. And I wanted to highlight that, it's important to recognize that builders on Kadena aren't programming in Haskell typically. They're
Right.
programming in Pact. Pact as a programming language is sufficiently easy that Ryan Matta, who's a popular YouTuber in the Kadena community, had his 6-year-old son on a stream live, and over the course of 20 minutes figured out how to write a Pact program from scratch with no knowledge. So, a 6-year-old can figure out in 20 minutes. Hopefully that means that an adult that has gotten enough sleep lately can figure it out in at least an hour, but maybe even faster.
And that's a great point, Tyler. If there are prospective builders out there listening to this podcast and they go out to talk, to explore Pact, you will not run into Haskell. You would have to make the decision to try and see how Pact was built to run into Haskell, but you won't experience it writing a contract.
Understood. Thank you so much for explaining that. Okay, another quick one. So I was thinking, does Kadena also have mining difficulty factor similar to Bitcoin?
We do have mining difficulty. We do not have the giant halvings that Bitcoin experiences from time to time. We adjust difficulty every month. And difficulty will continue to be adjusted until 2025 when all coins will have been mined.
Okay, got it. Thank you so much for answering. Over to you, Noah.
Thank you, Sayed. And with that, John, Tyler, Jenny Lynn, thank you so much for organizing this and being on the show today. Kadena Army, thank you so much for being here. Whale Coin Talk community, thank you so much for listening in. Remember that everything you hear through the course of this broadcast is for educational purposes only, not